All right, folks, my next guest remains bullish on this market, partly due to this upcoming earnings season, and views these bumps in the roads, folks, like tariff headlines and other things, as a buying opportunity. So let's bring a Simpler Trading VP of Options, Danielle Shay. Yeah, let me start with that. It's interesting because this is where you really have excelled over the last few years, right? When you and I talk on the day of earnings, you've got the nerve, you've got you're like, you buy this one, don't buy this one, into earnings. Most people say, well, you know, they hedge, you don't hedge, which it's great. People love you for that. But now some are saying we're too optimistic. These earnings estimates have gone up too much, and that might be the big thing that trips us up.
Well, Charles, that can happen, especially because the last 2 quarters we had a lot of big surprises to the upside, and so when we get too optimistic, even with good reports, the market could trade lower. So that's the one thing that I have on my radar right now, but overall I am still optimistic.
And it's also the, let's face it, it's not just the earnings but the guidance, right, these days, and I feel like a lot of these larger names have gotten so much credibility that before it was only Salesforce.com and a handful of names that were popular, you know, the CEOs that can talk themselves almost out of a bad quarter. But let's talk about the name that you love. When I saw the notes that you love Broadcom, I would say Broadcom is the most unknown $1.5 trillion company in the world.
That's right, Charles. Broadcom has been ignored for a long time, even though it just continues to trade higher. It has an absolutely beautiful trend. Earnings have been phenomenal. The pattern going into earnings and after earnings has been great, and I have a $400 price target on this stock.
Microsoft, you still like Microsoft?
I still like Microsoft, even though it's been consolidating. But you know why? Because I love it when stocks consolidate, because that gives you a buy opportunity before they break out.
So when you say consolidate for the audience, they make a big move up and then they kind of go sideways for a while.
That's correct. It's been going sideways pretty much since earnings last quarter, so it's been building up a lot of pressure.
I guess the good part too is that when that happens, if there's any nervous Nellies out there or weak hands, they'll sell. And you want to get all the weak hands out before it can make that next leg up.
Yep, that's correct. And that's always when I'm building up my long-term stock positions before the next move.
All right, Tesla. Tesla's already made one heck of a move. It's getting a good play today. Word is the administration may ease up on auto tariffs. But it was already making a big one of those big moves that it makes from time to time.
It was, and you know what? That has shifted the pattern. So Tesla, we've talked about it multiple times over earnings, and I've been a little bit bearish, but you know what? Over the last 2 quarters, that pattern has changed, and it's really shifted into being more of an AI stock. And I think that this stock is going to hit new highs relatively soon.
A lot of controversy in AI, particularly with funding, right?
Yes.
And so they're saying like OpenAI, some of the deals they've cut are ridiculous. Oracle being one. They say Oracle's margins are so small, there's no way it justifies its current price level, but you think it's going higher.
I do think it's going higher. I mean, look at the chart pattern. You have incoming volume, you had a huge breakout move, and now we've pulled back. We have this consolidation, and that stock ticker is continuing to trade higher. So I think this one's going into 365, 400.
All right, let's talk about some aggressive buys, okay? Because you're already aggressive. You're like, aggressive buys? So you can get more aggressive? CoreWeave.
Okay, so CoreWeave is a relatively new name, and so that's why I say it's more aggressive, because we don't have a really long-term price pattern here. However, we have a bullish trend, we have the attention, we have the incoming volume, and we have high short float. I've seen reports of upwards of 45% in this stock, so that's why I call it an aggressive buy.
Potentially a massive short squeeze.
Massive potential short squeeze.
You know, we both love those.
Which is why it's aggressive, and it's why I love it, but you have to be careful because it's volatile.
I say that what we've seen in the last 3 months in the financials have been a changing of the guards, right? With the coins and Hood and then SoFi, sort of Hup, and the others, the big, long, the companies that had these moats are starting to, all of a sudden their stocks aren't looking as great. You still, though, like SoFi a lot here.
I do still like SoFi, and SoFi has also pulled back into critical moving averages. It's consolidating, it has earnings coming up. This is a stock that does typically rally going into earnings, and it also has a little bit of short float too. So if it could trade higher with incoming volume, that could help it explode to the upside.
Western Digital, now you're too young to remember, this stock was a hot stock like 20, 30 years ago, whatever it was, and then everyone lost everything. This is one of those cautionary tale stocks. But they've reinvented themselves, and full disclosure, I have subscribers in it too, and we're just kind of riding the wave right now. You think it goes higher as well?
So, you know, someone in our trading room actually found this name recently, and I hadn't looked at it in a long time, and I looked at the chart pattern and I thought, wow, that looks just gorgeous. So nice pullback, cup and handle, and that short float as well. So,
cup and handle, my favorite chart formation.
Me too.
All right, Danielle, great stuff. You're killing it. Keep going, keep going. People really love you. I hear from the audience and a lot of people, and you get a lot of great feedback. Thanks.